Welcome back to the Deep Brain Podcast, the podcast where we break down the biggest stories shaping the digital economy, artificial intelligence, and the cloud revolution. Today, we're diving deep into one of the most important earnings stories of the year, Amazon's Q3 2023 results. This is not just another financial update, it's a reflection of how one of the world's largest technology companies is reshaping itself in the era of AI-driven cloud computing, while navigating global competition, innovation pressure, and the next frontier of digital infrastructure. If you've ever wondered how Amazon continues to scale despite economic uncertainty, why its cloud division AWS remains the backbone of global tech, or how it's quietly building a massive footprint in AI hardware, you're in for a powerful breakdown. Let's get into it. Amazon's third quarter for 2023 was a strong rebound. Even by its own high standards, the company delivered financial results that surpassed analysts' expectations across nearly every major metric. Let's start with the numbers. Total revenue for the quarter hit $143.1 billion, up to 13% per year over year. Net income reached $9.9 billion, compared to just $2.9 billion during the same quarter last year. Earnings per share came in at 0.94, well above analyst expectations of around 0.58 cents. In short, Amazon didn't just beat, it crushed expectations. The results sent Amazon's stock soaring 13% in pre-market trading following the announcement. Now, if you're following tech stock, you know that Amazon's growth has been more volatile than its peers in recent years. While Microsoft and Google have dominated headlines with their AI ventures, Amazon has been quietly reinforcing the foundations, its logistics network, its e-commerce ecosystem, and most importantly, its cloud arm, AWS. And in this quarter, all three engines fired together. Let's get a closer look at the breakdown of Amazon's Q3 performance. As for revenue growth, total revenue climbed 13% year over year, from roughly $127 billion in Q3 of the previous year to $143.1 billion this quarter. For a company of Amazon's size, and that's for a company of Amazon's size, that's a huge lift, especially considering ongoing macroeconomic pressures. Operating income reached $11.2 billion, up 343% year over year. That's not a typo. Amazon more than tripled its operating income, a sign of serious efficiency improvements. The company's operating margin improved significantly as well, from about 2% a year ago to 7.8% this quarter. That's a major shift for a company often criticized for razor-thin margins in retail. As for the regional performance, North America was up 11% year over year. International markets up 16%, showing real resilience outside the US. These are not just digital numbers, they're proof that Amazon's e-commerce and fulfillment network continues to adapt even as consumer spending fluctuates. Now, let's talk about the star of the show, Amazon Web Services, or AWS. AWS generated $33.1 billion in revenue this quarter, exceeding expectations of about $32.4 billion. That's a 12% year-over-year growth rate. To some, that might sound slower than the days of 40% cloud growth, but context matters. AWS is already operating at an annualized run rate of over $130 billion. Growing double digits at the scale Growing double digits at that scale is extraordinary. And the real story here isn't just growth, it's transformation. AWS is becoming increasingly AI driven. Amazon reported a 150% quarter over quarter increase in adoption of its Titanium 2 AI chip, designed for training large language models and machine learning systems. They also introduced Project Rainier, a supercluster featuring 500,000 Titanium 2 chips, signaling their move to compete directly with Nvidia and Google's TPUs. Amazon's strategic collaboration with AI startups like Anthropic and others further reinforces AWS's role as not just a cloud provider, but a full-fledged AI infrastructure platform. In essence, AWS is transitioning from being the internet's backbone to becoming the AI agent of the digital world. Now, how did the market react following the earnings release? Amazon stock surged by around 13% in pre-market trading, a strong rebound after a relatively quiet year. Analysts cited two main drivers: the unexpected strength of AWS and its AI initiatives. The improved operating margins, showing Amazon's ability to cut costs while scaling output. Interestingly, despite this strong performance, analysts noticed that Amazon stock had lagged behind peers like Microsoft and Google earlier in 2023. The perception was that Amazon wasn't fully capitalizing on the AI boom. But Q3 changed that narrative, showing the company's AI infrastructure advantage rather than a peer model-based approach. Microsoft may have OpenAI, Google may have Gemini, but Amazon, it's quietly building the highways those AIs can run on. During the Q3 earnings call, Amazon CEO Andy Jassy shared some interesting insights. He emphasized aggressive investment in capacity, stating that demand for cloud and fulfillment infrastructure continues to grow faster than expected. He also clarified the company's recent 14,000 job reductions were not primarily driven by cost cutting or AI automation, but rather by overhiring during the pandemic expansion years. This shows a disciplined long-term strategy. Build efficiency, streamline headcount, and reinvest the savings into AI and infrastructure growth. Jassy also highlighted AWS's AI trajectory, positioning it as a long-term differentiator. Amazon isn't just training AI models. It's building the chips, clusters, and orchestration tools that power AI across industries. He said, "We're investing heavily in AI because it's going to be transformative across every single customer experience we offer, from retail to logistics to AWS." Let's zoom out. AI isn't just another product category for Amazon. It's becoming a platform-wide evolution. Think about it. In e-commerce, AI optimizes inventory, pricing, and logistics. In AWS, AI powers customer workloads, developer tools, and automated data orchestration. In Alexa and Prime Video, AI personalizes recommendations and automates content optimization. But perhaps the biggest move is hardware sovereignty. Amazon designing its own AI chips. This reduces dependency on Nvidia, improves margins, and opens the door for AWS to offer lower cost compute to its clients. Project Rainier and the Titanium 2 chip are strategic weapons. not just in AI, but in cost control, energy efficiency, and scalability. Let's summarize what this all means for investors, developers, and industry watchers. AWS remains the cornerstone of Amazon's profitability, the engine funding everything else. AI, hardware, and infrastructure are becoming Amazon's competitive most. Margins are improving, signaling operational discipline. Stock momentum has returned, showing regained investor confidence. Strategic clarity is back. Amazon is no longer spreading itself thin, it's focusing on scalable, AI-driven cloud innovation. Looking ahead, Amazon's focus on AI infrastructure over consumer-facing AI products could prove to be the smarter play. It's building the tools others will need to compete. This quarter didn't just define Amazon's performance, it defined where the entire cloud industry is heading. Every major tech company now understands the future is hybrid, AI-powered and cloud-integrated. AWS's evolution mirrors the broader transformation across tech, where compute, storage, and intelligence move seamlessly between the cloud and the edge. And Amazon's strategy of building AI infrastructure instead of chasing AI headlines shows remarkable long-term vision. The real value won't be in chatbots or gimmicks. It'll be in who controls the infrastructure of intelligence. As we close today's deep dive, one thing is clear. Amazon's Q3 results were more than a financial win. They were a strategic statement. This is a company redefining itself for the AI era, using its vast infrastructure and global reach to power the next decade of innovation. While competitors race to release AI models, Amazon is quietly ensuring that every one of them runs somewhere on its cloud. Thanks for joining me for this breakdown of Amazon's Q3 2023 earnings here on Tech Titans, the Deep Frame Weekly. If you enjoyed this analysis, make sure to subscribe, follow, and share this episode. Next week, we'll be dissecting Microsoft's AI strategy and how it's shaping enterprise software for the next decade. Until then, stay curious, stay analytical, and keep your data secure.